The obvious angle is bank regulation. The important angle is who just got more room to breathe. US regulators are moving closer to a softer Basel capital draft, and the early signal is that most big banks may not see major overall capital increases after all. That is a huge political and economic tell, because the chain here matters. If regulators ease the capital hit, large banks keep more flexibility, lending and trading desks face less pressure, and Washington sends a message that post-crisis rulemaking is being rewritten around growth, market function, and industry complaints. Banks like that because tighter capital can restrain activity. Critics hate it because thinner cushions can leave the system more exposed when stress shows up later. So this is not just a paperwork story, it is a power story between regulators, Wall Street, and everyone who remembers what happens when financial risk gets underpriced until it is too late. Big lenders are affected directly. Borrowers and businesses are affected more quietly through credit conditions and how aggressively banks can keep operating. And politically, it tells you the mood in Washington is shifting away from maximum restraint and toward a more industry-friendly posture. Watch when the actual draft lands and whether it really keeps most banks broadly unchanged. Watch whether the GSIB surcharge offsets some of the relief for the biggest trading giants. Watch whether critics inside or outside the agencies start framing this as deregulation with a nicer label. That's where long form gets more interesting. Risk and Recap has the receipts. Follow for the next tape read.